So we will continue on with a BVC brief. This is New Frameworks for Impact Investing, featuring Emily Thomas, CFA, Executive Director, Morgan Stanley Wealth Management, and she will be moderating a discussion with Lily Trager, Managing Director of Investing and Impact, Morgan Stanley Wealth Management. Emily is a Senior Impact Strategist on the Investing with Impact team. Prior to this role, she was the lead Investing with Impact analyst on the Global Investment Manager Analysis Manager Due Diligence team and helped launch the Diversity and Inclusion Investment Office. Emily began her career in finance at Cambridge Associates. Before entering finance, Emily worked in international development and spent time in Ecuador and Uganda. Emily graduated from Washington University in St. Louis with a BA and received a Master of Law in Diplomacy from Fletcher School at Tufts University. She is also a member of CFA Society in New York, where she is currently the Vice Chair of the Sustainable Investing Group. Emily and her family live in New York City. She's also here with us today to moderate a discussion with Lily, who had to join us on screen. So welcome to the BB stage, Emily, and welcome to the BBC screen, Lily. Did I hear correctly that Lily's not from Central Oregon, or that she's not here in person, but you actually are from Central Oregon? Is that right?
That is correct. Hello, Bend, Oregon. And
hi, Lily. Okay, Emily, why don't you come on up and, oh, there you are, right behind me. Take it away, you two. Enjoy.
Hello. I'm going to put this down here. Well, first, I just want to thank Bend Venture Conference. What an amazing crowd for having us. And I also want to thank Jacob Fain, who hopefully is in the audience somewhere. Hello, for helping to connect the dots and bringing us all together today. I also, just before we dive in, like one more round of applause maybe for the incredible pitches we heard this morning. And I think I'm inspired and incredibly excited to be here with you all, but also be here with Lily today, because one of the things we initially connected on, we've been friends and colleagues for many years, was actually a shared passion for what brought us into the financial services industry and investing with impact. And that's really a focus on, or seeing the impact that entrepreneurs like yourselves can have. And my experience living in Ecuador, I was working with a group of Colombian refugees and saw, a need for jobs and the impact that microloans had on a group of women artisans and their ability to create jobs and support their families. And Lily shared a similar experience living in Madagascar. And so again, just want to thank you all for having us and letting us be a part of this incredible community and incredible organization. So with that, I want to briefly introduce Lily. Lily, again, friend and mentor of mine, excited to be on the stage here with her. She has really been the lead architect of the Investing with Impact platform at Morgan Stanley. She also has led due diligence at a smaller firm focused on impact investing. But I think, one of the things that I connect with most about Lily is her focus on building communities. And so she created a group called WISE, Women Investing in a Sustainable Economy. They now have groups throughout the US and even internationally, really focused on supporting people and women in particular interested in sustainable investing. She was also named a Maker, an award for people who are really trailblazers in their field. And so with that, I'm here, we have Lily already up on the screen, but I'll turn it over to her. Lily, you've really dedicated your career to impact investing and sustainable investing. Can you tell us a little more about what motivated you to enter this field initially?
Happy to, and thanks so much, Emily. It's a pleasure to be here with you in a hybrid context, doing my part to protect others from getting COVID, which my family and I have right now. I'm actually Zooming to you all from about 550 miles south in Silicon Valley. And while I grew up in Tumalo and have a very, very deep connection to Central Oregon, I feel like this is a pretty appropriate place to be speaking to you all about impact investing through venture capital. Before Silicon Valley, I lived and worked in New York City and Boston. In fact, I've been on the East Coast since starting college way back in 2002. So it's really good to be back on the left coast with you all and those of you who live here. So you said, right, it's been an interesting market that has matured quite a bit in the 15 plus years that I've been in impact investing. And I would say that, the kernel of entrepreneurs is absolutely the constant. The idea that, those who are willing to take risks, right, to go where others have not, to try to seek to create solutions for major challenges that others have not been able to solve, that is what we are investing in, right? And at Morgan Stanley, we're really blessed to have the scale of a significant amount of capital. And we've also been one of the first movers in this space, right? In fact, the platform that Emily and I lead, the Investing with Impact platform, today helps to steward over $70 billion of our clients' capital into entrepreneurs, through publicly traded companies and privately traded companies that are seeking positive environmental and social change. We celebrated our 10th anniversary this year, so it's a really big deal. And I'm really excited that of that 70 or so billion, nearly $3 billion is in private markets, meaning we're investing in entrepreneurs who are not yet, right, through a liquidity event or another transaction public. And we are investing in those companies and projects alongside many other investors who are both small, medium, and large. And we need the full ecosystem of capital, philanthropic capital to market rate seeking financial return capital in order to really bring these impact ventures to life. So happy to be here today to discuss a little bit more about it.
Yeah, no, thanks, Lily. And again, you've spent the last really 8 years of your career building that platform. Maybe just diving in a little bit deeper, can you share with the audience some of the incredible work that you've spearheaded with the Investing with Impact platform at Morgan Stanley?
Sure. I mean, there's a lot of things to be proud of, right? But let's just talk about what perhaps is at the top of the list. I think at the very, very tippy top of the list, and Emily, you've been leading this work, is our effort to get more diverse-owned private market managers on our platform, right? Unfortunately, diversity in the investing field is still very low. You wouldn't necessarily know that from a gender perspective looking at Emily and I, but especially if you think about all dimensions of diversity, right? Race, ethnicity, orientation, age, et cetera, veteran status, right? Unfortunately, diversity is abysmally low in the investing industry. In fact, according to a recent survey, which many of you have probably read from the Knight Foundation, right, less than 1.5% of total US-based assets under management are managed by diverse-owned firms. Less than 1.5% of all assets that are professionally managed by investors in the US are diverse-owned. And so what we've been doing, Emily, as you know, is to develop a number of frameworks to really help to, dismantle some of the historic barriers that have existed for diverse-owned managers and ultimately seek to increase the flow of capital in that direction. And I think we've been pretty successful this year, although there's still many, many more miles to walk. I know we doubled our diverse-owned asset managers and now have about $10 billion or so invested in diverse-owned strategies of that 70 billion. So our percent is much higher than that 1.5% in the study. But again, there's still a lot more work to be done. And many of those diverse-owned, our founders and those who we may want to be investing in through private market and venture capital. I'm also really proud of the work we've done in developing a set of systematic metrics. So Emily, you and I developed something called Impact Signal, which for those of you who are in the investing industry, it's somewhat akin to Morningstar stars, where we're essentially rating investment strategies based on how well they are pursuing their environmental and social objectives. So when we read all the stories that say, oh, sustainable and impact investing is greenwashing, it's not actually moving the needle, we are seeking to combat that through really systematic and rigorous, right, evaluation of metrics. And we have access to significant amounts of data. We literally have thousands and thousands of data points that can help us to center our analysis around understanding who's actually delivering on their environmental and social goals and who's not. public markets, equity, debt, and hopefully over time, private markets as well. And so we're really excited about that. We call our proprietary technology Morgan Stanley Impact Quotient. And it's super cool because you can actually x-ray your own personal portfolio to see how well the companies that you own in your portfolio align with the impact issues that you care most about. So if it's education or healthcare or mitigating climate change, right, you can see how well your portfolio is aligned with those analytics through Morgan Stanley IQ. So I'd say all the work in DE&I and the work in building a rigorous and disciplined set of analytics to evaluate impact is probably what I'm most proud of.
Well, Lily, that's great. And one thing I just want to touch on again, like it was so amazing hearing the founders and watching their pitches today, because I think it speaks to the diversity in this room and the diversity of the founders here. And it was really inspiring to see that. Lily, can you talk a little bit more about the sustainable and investing with impact space more broadly? How big is it? And are there trends you've observed over the last decade?
Sure. So our industry is really rooted in a moral or ethical orientation, whereby largely faith-based institutions, think Quakers, think Catholic, think Jewish institutions, right? We're basically looking to avoid investing in areas of the market that were objectionable to their faith. So Quakers might have divested from weapons and alcohol, right? But since that period of formation, literally over a century ago, the sustainable investing field has really grown into something much more mainstream in the last few decades. We talk a lot about impact investing. I'm curious if there's any guesses in the room on when the term impact investing was coined. What year do you think it was coined?
Any thoughts? A long time ago.
All right. Well, if you said 2007, which is the same year the iPhone came out, you would have been right. Right? If you put this into perspective of the much longer history of the financial markets, that's nothing. We're just getting started. It's relatively nascent. And so as you'll see on the slide that I'll share today, and I'll show just one slide today, it really gives you some perspective on the universe of sustainable and impact investing. Emily, let me know if the slide is not up.
The slide is up. You are
awesome. Good. Okay. So the largest two circles really represent assets invested sustainably. That's both globally and in the US. And by some estimates, this is now, listen to this, 1/3 of all assets under management in the US. That's retirement pools of capital, that's personal investments, that's public investments, right? That's huge. Literally $1 out of every $3 is going towards an investment that is really seeking to avoid the risks of environmental and social aspects and help create solutions. And this, commiserates with a lot of the research we've done at Morgan Stanley, showing that over 80% of our clients, our 15 million plus clients, are interested in sustainable and impact investing. And to be clear on this term, right, sustainable investing is a very large umbrella. It includes strategies that simply screen out objectionable activities. It also includes something called ESG integration, which is the process of adding environmental and social factors to your investment selection process. It also includes more thematic investments, which is where we will hopefully be discussing in a minute. So this might be areas like clean energy, access to better quality healthcare, education, financial inclusion, right? And if you think about something like clean energy or climate, there's so many intersectional issues therein. So we tend to think a lot about sustainable infrastructure, water, right? Natural resources, broadly, farmland, as well as timberland. We look at sustainable or more resilient forms of agriculture, right? And there's a really broad range of activities which are sort of subsets of these broader themes. And the trend is consistent, but as we sort of move down in the circle, in the nested circles, you can see that impact investing, which is really focused on those themes, climate, health, education, is a subset of that broader universe, a much smaller subset, right? In this case, about 1% of total global assets under management. So about $1.2 trillion today are invested in public and private investments focused on environmental and social outcomes. So within that, the private markets is even a further subset, right? So 1.2 trillion total in impact investing. Private markets a subset of that, which can include individual companies, projects, as well as fund managers, venture capital, private equity, private credit, real asset, and more. So it's a relatively small market in the grand scheme of things, but certainly a fast growing one. And we're seeing it to be very important for our clients because it's important to them to help tackle some of the greatest challenges of their time with their capital.
And speaking of private markets, Lily, I know we are doing more and more work in that area. Can you share a little bit about what we're looking for in the private market space, including venture capital funds, and what some of the trends are that we're seeing?
Yeah, so I mentioned we've invested about $2.5 billion in private markets over the last 8 years, which has certainly been a journey. Our pipeline is quite robust at this point across a number of key themes, and we're starting to be able to build out some intelligence around the broader market opportunity set because of this pipeline and landscaping work, right? We literally have hundreds of investment funds and companies that we are monitoring on a regular basis as part of our pipeline. And so this gives us the ability to kind of be constantly on the lookout for new fund managers as well that are investing in companies that ultimately change how we live and interact with our society and environment. We're closely watching the development of new impact measurement and management frameworks, which I hope we'll spend a bit of time on. For those of you that might be thinking about how do I show investors, right, the ability of our company to meet environmental and social goals, there are a number of impact measurement frameworks that we as investors use to evaluate your progress on that, right? The Impact Management Project, IMP, or the operating principles of impact management that are being adopted by more funds as well. And we're helping to shape some of the, some of the frameworks that are also evolving. There's still a lot of room for standardization and impact measurement. I think Emily will speak to this in a minute, but if we take something like the landscape of funds and companies that are focused on decarbonization, and you ask what is the single most important environmental metric that you're seeking to affect change on with your company or with your fund, there are the broadest range of possible metrics. And so we have to distill that, build some sort of systematic way to evaluate funds on a like by like basis, and then ultimately determine where to invest capital. And that process is deeply rewarding and something that we're spending a ton of time on. Just carrying forward the idea of climate tech, which is an area that we're seeing a ton of client interest given renewed urgency around financing solutions, the government's IRA, and the broader global commitment to achieve net zero targets. Sustainable agriculture is a key area of investments there. Today, we know that agriculture contributes about 11% to global emissions, and we're only going to need, right, more and more food as the global population is projected to grow over 8 billion next month, believe it or not. I remember when that number was 6 billion. So we're really interested to see how these types of funds are able to do what they say they're doing, right? How they're investing in companies that are actually moving the needle on reducing carbon emissions in the agriculture sector with that sustainability or resiliency lens, which often includes a community element. So that's one of the things we're really excited about in the venture capital space. And then regarding DEI, I think it's super interesting to see some of the innovation, not only around companies that are diverse led, but also what they're doing to invest in marginalized communities, right? And that ultimately is sort of what we call the holy grail, if you will, a diverse led fund that's also investing in marginalized communities and helping to create better outcomes for those who have been, historically disenfranchised. And so we see really interesting fund managers focused on consumer products, but also focused on healthcare, affordable housing, education in communities that need it the most. And frankly, deep intersection between climate change, right, and diversity, equity, and inclusion, because we know that the worst effects of changing climate are most deeply felt by those communities who are, most underserved globally. So I think this is an area that we're also very focused in building a set of metrics to be able to evaluate how lives are actually being changed as a result of the capital through a company that we invest in or a fund that we invest in.
Yeah, I'm also really excited by the innovation we're seeing from startups and the greater number of funds we're seeing investing in those startups and really that are solving some of the world's biggest problems. I mean, we heard about some of those solutions up here today. And Lily, you touched on impact measurement, and I think that's a growing demand from many of our clients. So thinking about the end investor who's investing in those VC funds, who's investing ultimately in companies like some of the entrepreneurs today are building. And what's interesting, and I know Lily touched on this, we're seeing greater standardization, around some of the frameworks, but the data still varies significantly, both on what type of data is being reported on, but even how that data is being measured and reported on. And I think as we're thinking about this and thinking about what our clients are looking for, some of the things that we're most focused on, and again, from the funds that we're looking at, so we want to make sure that those funds have an intentional approach to how they're thinking about measuring impact and collecting that data. So what is their key mission? What is their focus, and how are they then using metrics to help guide them and measure themselves and ensure that they are accurately getting to that end goal, but then also reporting out to clients. We're also looking for consistency. We want this data to be reported out, not just us, but again, those end investors on a regular, consistent basis. And then finally, rigor. I think we've seen some innovation, and I think Lily touched on this, but really how you're thinking about using those metrics. So we've actually seen some funds where they will say, this is our bottom line, and we're not going to invest in a company that doesn't meet this impact metric. So for example, a fund that will only invest in companies that are creating technologies capable of realistically mitigating a gigaton of CO2 in the next few decades. So big numbers there, but I think that, putting that line in the sand and then oftentimes connecting their carry, so the profit that the GP is going to make to those impact metrics as well. But I think a lot of innovation, and ultimately, for you all in the audience who are entrepreneurs, just something to think about in terms of what the end investors are looking for.
Absolutely, and Emily, you're making me realize that as companies in the audience are being approached by venture capital firms who are, seeking to make an investment and might be interested in tracking your environmental and social metrics, because we at Morgan Stanley are demanding that they report those out to us. And if you're getting surveys that are overwhelming or that are burdensome, right, one of the ways that we've helped coach companies and funds to navigate that is really to prioritize. It shouldn't be 100 questions. It should be 5, right? What are the top priorities in terms of the environmental and social outcomes that you're seeking to change? It may even just be 1, as Emily said, right? We know a fund manager who only invests in companies who in aggregate can realistically mitigate a gigaton of carbon in the next decade, right? And that's a very clear ambition. And ultimately, we think that prioritizing those metrics for your company and for, frankly, the venture capitalists that have interest in your company will only lead to better outcomes in the end.
Well, thank you so much, Lily. I want to make sure we leave time for Q&A, but I really have enjoyed the discussion.
Oh, this has been incredible, especially to learn. Yeah, how about a round of applause for the two of you? Emily and Lily, to be able to learn more about impact investing just ahead of the impact track is really powerful. So thank you. It was such a fantastic conversation. I know that we probably have some questions from the audience, so I'm going to just see. I guess, Lily, I have a question for you, well, for both of you, really. What are you most excited about in terms of these trends in a certain direction? Is there anything specific that jumps out for you that you're like, I am so excited to see X, Y, and Z happen in this next short bit of time?
Yeah, I'm happy to take that first. I think it's just these are critical problems that we have in the world today. Thinking about, the wildfire issue we touched on up here, or, regenerative, ag, and how we're thinking about solving those issues is going to take ideas from all over and innovation. And so I think I'm just excited for that innovation and to continue to see those ideas sprout up from the audience and, more people more broadly.
Yeah, for sure. I mean, for me too, right? It's amazing to see these brains coming up with these incredible ideas, but these are ideas that are compelling enough that people want to put big funds behind them. Anything to add, Lily?
I guess I would say that, private market investing has often been in the realm of very wealthy investors, right? People who we call can afford to take illiquidity risk, right? They can afford to lock up millions of dollars of capital for 10 plus years, which is the life of a venture capital fund, in order to see, progress in the companies they're investing in and realize returns, right? It's that long of a period. And what we're seeing, and Morgan Stanley really leading in, is helping to democratize access to private market and impact investing, right? Making this something that everybody can partake in, of course, in accordance to your own risk and financial goals. But to me, that's where I'm super excited. I know we run a $10,000 minimum impact portfolio, on the public market side, and we're looking, I've seen investments as small as $25,000 on the private markets side for a sustainable infrastructure fund. So I think that democratization is a key thing to emphasize, and something I'm, really excited about.
Absolutely. Yeah, that's incredibly exciting. So what areas of impact investing do you see growing the fastest, so specific areas?
Yeah, I think, I'll take it first and I'm happy to hear Lily's, follow-up. But I think, we're seeing a lot of demand across the board. I think it's 99% of millennials are focused or interested in investing alongside their values. And so I think broadly we're seeing increased demand, and I think specifically around things like climate change and DEI. Those are two of the top fastest growing, themes and most popular with our clients.
Yep, totally agree. Plus one, as they say. I think that climate, there's a renewed urgency, of course, but there's also a renewed focus given some of the work out of Washington and what we're seeing in terms of net zero ambitions that institutions, companies, right, and cities have signed up to deliver on.
Well, and that makes so much sense because the crossover is so direct, as you mentioned earlier, and we're talking about the global majority, right? So this is a huge amount of people who will now have access to this very large, exciting space. Well, I thank you both for joining us today. Lily, I hope you and your family get healthy as soon as possible, and really, such a pleasure. Thanks for joining us.
Thank you.